Hello and welcome to a fresh new edition of Bazaar Morning Call. We are starting a new week. I'm Prashant, with me my colleagues Sonia and Nigel. Guys, good morning. You know, the question is, have we seen this movie which is about to play out before as well? What movie am I talking about? I'm talking about the fact that US jobs data on Friday came out stronger. US markets sold off on expectation that interest rates will be higher for longer. The US equity sell off aggressively, 3 to 3.5% on the S&P and the Nasdaq. Nasdaq almost down 4%. And then here in India, you know, we start lower, sharply lower, and then recover through the course of the day. Is there a twist in the tail? The twist in the tail could be oil prices, which are at 90, almost 98, closer to 97 now than to 98, but almost there. Could this be the spoiler? So it gets a little more tricky, a little more interesting because of that. Otherwise, I mean, I would have said that we've seen, we perhaps are going to see a repeat of this exact price pattern performance that we've seen for the last many months. Big reaction in US in response to a data point like the jobs report, and a very feeble follow-through in terms of selling at least, and some point market comes back up. But oil is the joker in the pack. We'll discuss about this in greater detail. Sonia, hi. Nigel, hi.
Hi, good morning, Prashant. Good morning, Nigel. And there are so many data points that we need to consider, right? I mean, we kickstart earnings season this week as well. There's TCS later in the evening. All eyes will be on that. But for starters, the global cues are definitely going to take the markets down in early opening. The SGX Nifty is indicating a very steep fall. And, you know, as we were talking about, the jobs data was extremely strong. I mean, not just 263,000 jobs that were added in September, but the unemployment rate has fallen. It's fallen to 3.5% from 3.7% in August. Proof that the US economy has not slowed enough to get inflation under control. And that's the big narrative, right? They want to get inflation back to 2%. And until that happens, rates will continue to rise. So it's that narrative that spooked the markets on Friday, and hence we're going to take that forward today as well. The market now believes that the Fed has no reason to ease off on the rate hikes. For the FIIs, they continue to sell. So FIIs sold about 2,250 crores on Friday. Let's see. For now, it's not looking that great in terms of a market opening. But then we'll take it from there. We have many cues to negotiate as well.
Earnings, right?
Primarily earnings.
Oh, absolutely. And I think that makes it interesting, especially IT, which will be first off the block, Sonia. Let me just quickly outline the most important thing. There are actually only 2 or 3 things to focus on. So the US jobs report, I'm not calling it good or bad because, I mean, then, you know, if it is good, why is it not good for the market? If it is bad, why is it, not bad? It's good is bad. I mean, that we are in that kind of a dynamic. So I'm just going to get hawkish. I mean, the September jobs report was hawkish. By the way, mind you, it's not as if the headline number was a blowout number. It was marginally higher than expectations. But what was hawkish about this was that the unemployment rate and the underemployment rate, both are at cycle lows or pretty much at near all-time lows. So that is essentially why the labor market, according to this data point, remains very, very tight. And a labor market which is very tight is a problem for the Fed. It reinforces expectations that, inflationary tendencies will stay high, rates will need to move up more. 75 in November now perhaps is a given. But the problem for the market is that maybe rates will stay higher for longer. There is no pivot party, right? I mean, a quick turnaround, a quick change. But I don't think that hope gets killed. The market will continue to believe that how long will the Fed continue to press the pedal, hurt the economy? At some point, they will need to stop. So far, data shows and Fed's own actions and words show that it's not happening. We will hear from a long line of Fed speakers. This is important because, you know, most of them will react to the jobs data. And any expectation that maybe, you know, this is it and now labor market is slowing down, maybe, you know, according to some, it is slowing down a little bit. It has to with these kind of rate increases, but not enough for the Fed. So we will hear from these Fed speakers, most probably sounding hawkish through the course of the week. The next data point is the US CPI number. That is the last one before the last big data point before the November meeting. So this is going to be kind of important as well. The core number is seen on a consensus basis rising by about 0.4% or so. As I said, you know, we've seen all of this before and the market here has come out pretty unscathed. The relative outperformance is still huge in India. We're down 10% from all-time highs, but the US is basically back at June lows, right? No, we're nowhere as worse off as the US is or other parts of the world, Europe, etc. is. The only difference is oil prices are starting to inch up once again. Oil's now almost at 98. It's up 18% from the 26th of September. In the last 8 trading sessions, it's moved up 18%. It's getting closer to that 3-digit mark, which is a problem. For India, because we are a large importer, but also because if oil stays high, it basically reduces any chances of a quick disinflation. I mean, oil goes into pretty much everything, and that is a problem for central banks, not just the Fed as well. Here in India, I mean, I'll just leave you with a big number. The big one is the lows that we saw on the 30th of September, from which the market bounced very nicely. So 16,747 is that number. In a big picture sense, that is the level to really watch out for. On the upside, I mean, 17,300, I think, is something which the market will struggle to cross. 17,300, by the way, we closed around that level, is also the 61.8% retracement of the entire rise from the June lows to the recent high. So, and of course, 17,400, 17,420. So there is enough on the upside. On the downside, you need to wait and watch. The impulse, as I said, will be to try and buy the dip. Friday was a case in point where we saw that very strongly. And IT services, even though the Nasdaq sold off 4%, I think presents an interesting dynamic. It's reporting second quarter earnings. What if the commentary, etc., is not as bad? It remains the one large block in the market which is completely bombed out despite last week's pullback. So I think that is perhaps one space, to my mind, which you'd want to watch out for, which market participants will watch to try and buy, I mean, at interesting levels at different points during the course of the week, because the earnings themselves are spread out. Nigel, what are you watching out for?
Well, morning, guys. I'm getting a little bit cautious today, and I'll tell you why. Because on Friday, we saw a big intraday recovery both on the Nifty and the Nifty Bank. So it seems that the Indian bulls at least were going with some bit of hope. Maybe there'll be a bit of a miss on that jobs report. So that could be a bit of a problem, because we'll pull back all of that, as the SGX Nifty is suggesting. The FI outflows have resumed as well. Remember, the first few days in October, we had positive number. In a single day, they've turned net sellers. They sold close to 2,250 odd crores. And all the good work that was done in the previous 3-4 trading sessions, that was done away with. This FI selling is a bother for me. On the index futures front, well, the short positioning continues to remain at around 80%. Remember, prior to that, we were seeing some bit of arbitrage. That is, they buy in the cash and they short futures. Now they are short in the index and they're continuing to sell as well. At some point of time, that'll catch up, but that's another cautious indicator. And on the option side, you're not getting any big direction, because they added 45,000 calls and puts both on writing and the buying side. What is the broad range then? 16,950 around 17,500. Remember, 17,500, we almost went there last week, and we saw some bit of selling out there. And the data points as well should come off you. 20, 50 DMA, that comes in that vicinity on the upside. On the downside, the hope is the 100, the 200 DMA that was recently defended, that gets defended yet again. The Nifty Bank, that's the joker in the pack for me. Remember, in Friday's trading session, we went down to around the 38,800 odd. From there, we saw a bit of a bounce, and we managed to close above the 50 DMA. So can we take support at Friday's lows? Well, that will give bulls some bit of hope. But otherwise, there are too many headwinds today. The US bond yields have spiked up. Crude at around, closer to around $98 per barrel. Dollar index at around 112.5. And also the geopolitical issues, whether you're talking about Russia, parts of the Middle East as well, that's back on the table. So how do you approach trade? Well, for me, a sustainable bounce will come only once the rupee stabilizes. You can't have the rupee go to around 83 odd and look to buy the index. So stability in the rupee, that's point number one. And the second factor is cash is a position. You're going to be going through some volatile times. And cash, if you have it in hand, you could deploy it as well. So just keep that in mind. For starters, a big gap down, maybe you get a bit of a bounce, but intraday, I think that gets sold into as well. Sonia.
And there are plenty of cues, right? I mean, we kickstart earnings season today in the evening with TCS coming out with numbers. And let's not forget, TCS has lost 18% of its value this year. So it's going into its earnings season with a lot of caution. The demand commentary will be watched very closely, considering that TCS has over 20-30% of its earnings that comes from, challenging pockets like Europe as well as UK. And the big question that everyone's asking, will the Q4 margin guidance of 25%, will it be maintained given the kind of challenges that we're seeing, the impending recession that perhaps the US is heading into? So all of these questions will be answered later today. But that's today. Going forward through the course of the week, you have plenty of numbers coming out. There's HCL Tech and Wipro tomorrow, followed by Infosys and Mindtree. And then we wrap it up with Bajaj Auto that comes in on the 14th. So lots to talk about in terms of individual cues. But let's kickstart the show. Today is going to be a difficult start to trade. No two ways about that. And we have some calls coming in. First one from Vikash Jain of CLSA, who says that the evidence shows performance reversals between leaders and laggards in the last quarter as investors possibly book out of winners. A slew of macro events over the next 2 months may lead impetus to this trend reversal. This and the big valuation premium of India equities to bonds, peer markets and its own history forces us to make our India portfolio more defensive. Vikas says we exit from Tata Steel, Hindalco, SBI and M&M. They have added Ultratech, HDFC Life and HCL Tech. Vikas says we turn to a big underweight in consumption, a mild underweight from a big overweight in materials, slightly overweight from underweight in IT and a big overweight in insurance. But he remains overweight on banks, real estate and on the energy stocks. All right, let's also get you some money market views because as we were telling you, there was a steep depreciation in the rupee and that seems to be the big talking point. B. Prasanna of ICICI Bank says better than expected US data on jobs, services PMI and a hawkish commentary by the Fed members have put the dollar back on the strengthening path. The rupee gave up its outperformance and depreciated sharply against the dollar as the magnitude of the RBI intervention reduced. B. Prasanna also says that higher current account deficit owing to a strong domestic demand, weak export growth and rising dollar against emerging market currencies are headwinds for the rupee. He expects the rupee to trade in a range of 82.20 to 83.50, weakening bias this week due to persistent onshore and offshore hedging flows. And on the bonds, V. Prasanna of ICICI Bank says the global yields hardened owing to a hawkish rhetoric from the Fed members, a robust economic data and higher crude resulting from production cuts. Further, he also adds that the global bond index providers have refrained from immediately including India, citing a lack of infrastructure. As a result, domestic bond yields are headed higher. Bond supply pressure and expectations of higher inflation is likely to keep the yields under pressure. He expects the 10-year benchmark bond yield to trade in a range of 7.4 to 7.6%.
Well, we have a lot of stock-specific action as well to track today, so we'll get to that in just a bit in our special Top 10 segment. We're looking at IDBI Bank, IGL, PNC Infotech, JB Associates as well as JP Power, ONGC and Oil India. And all those stocks are on our radar. On positive news flow, let's see most of the stocks should open up in the green. We also have Tata Motors, Bandhan Bank and SH Kelkar. Their stocks are likely to open up with a bit of a negative bias.
All right, Ken Peng is now joining us. He's Asia Pacific investment strategist with Citi Private Bank. Ken, great to have you with us here on the program. Thank you very much. So where does all of this leave us? I mean, the jobs report, the big sell-off in US equities, and of course, I mean, oil, which is rising, right? Which kind of dashes any hopes for near-term disinflation. How are things set up?
And if the London Metal Exchange decides to ban Russian metals, then we'll probably have more pipeline inflation feeding through. So all these signs, like you mentioned about the jobs and the oil, that probably delays or slows down the roll-off in inflation. So support for more Fed hikes, for more Fed tightening, is stronger now compared to, say, a week ago. The only thing that's arguing in the opposite direction is bond market volatility, widening bond spreads, basically a significant decline in liquidity in the US and global bond market. And so, the UK helped with that as well. But generally speaking, I think the bond market health is something that could be a bit of a wild card in the coming months, beyond just the data on employment and inflation.
What does this mean, Ken, for global equity markets, which in any case have been under pressure all through the course of this year? If rates are set to move higher and perhaps we could head into a recessionary situation in the US, do you see further headwinds for global equities?
Yeah, absolutely. Like the things that might convince the Fed to turn around earlier aren't going to be positive for equities. So when I talk about bond market dislocations, right, this is a clear example where we've seen credit spreads, CDS spreads widen, but they're not nearly at recessionary levels. So there is probably still more to come, and so these conditions aren't very conducive to positive earnings. And so, we're looking at 3Q earnings about to begin, this week, and it's the earnings themselves are going to be okay, but the outlooks are probably going to be much heavier. Yeah.
Hi, Ken. Morning. I recall you stating, I think, towards the end of August, start of September, that rally that we saw from the June lows, that's likely to get sold into. Well, you got that right. U.S. markets, they revisited those lows. But the Indian markets, luckily for us, we're still 10% above those levels. My question to you is, how much lower can we go in terms of the U.S. markets? Do you see there's a sharper correction in store? Point number one. And what's your view on the Indian markets? Can we continue to outperform?
Sure. So very briefly, we're looking at the U.S. S&P 500 earnings per share. We expect that to contract by 10% in 2023 in a moderate recession. Yeah. So if we go beyond that, then that's it could be worse. But so that compares to about 7-8% consensus earnings growth from a bottom-up perspective. So that's a significant adjustment downwards. Even if we assume the multiples stay the same, roughly 15, 16 times, that's still another 15 to 20% downside from where we are now. So I think we probably will breach the pre-pandemic levels for the U.S. India has outperformed both in terms of currency and equities by a large margin, and a lot of that I think has to do with beneficial inflows, right? Because if you have a EM mandate in India, it's kind of maybe to a lesser extent Indonesia as well. These are the only markets that are absorbing inflows, and I think that's been driving part of that. So the foreign inflows have been driving part of that outperformance. So I think one of the commentators just a few minutes ago mentioned that the outflows have begun. I don't think it's a huge problem, but I think when the U.S. is under such pressure, it is very difficult for India or any other market to really to make gains.
Sure.
Right. So I think relative performance might still be okay, but I think absolute gains are going to be very difficult to make.
1 second, hold on. Did you say that if the multiples stay the same, there is a 20 to 25% downside from current levels in the U.S.?
15 to 20, yes.
Okay, so 15 to 20% downside in the U.S. left. So we're not done with this, fall in the equity markets just yet.
Look, the equities never bottom before the recession begins, and we're pretty sure that we're going to have one. We're going to experience one next year. And so when does the equity market bottom? It typically is in the middle of a recession, not the beginning or the end. And so, no, we're not there yet.
So basically somewhere in the 2000 handle on the S&P, Ken.
I think that brings us to about 3,000, not 2.
Sorry, 3,000. What am I saying? 3,000.
I was wondering.
29.99, 29.90.
Prashant, a couple of bulls got knocked down.
No, it's almost there. I don't know if you guys remember, Rupal Agarwal made that point. She was on and she was, she's a large asset manager. Her point was with regards to the US markets and consequently what happens to India. She's got the US call absolutely bang on because we are back at June lows. And I mean, if what Ken is saying comes true, you're close to 3,000, under 3,000, right? But with regards to what's happened here, it's been absolutely astonishing our performance. Just 10% knocked from the
I think it's also
highs.
because how strong the domestic economy is and how much things are picking up here, right? But Ken Peng, as always, thanks a lot for joining in and speaking to CNBC-TV18.
Thank you.
Have a great day. Well, that's our first voice on global equities coming through saying that things are not looking good. And perhaps an additional 15 to 20% fall is what you can expect in the US markets. India, of course, has been resilient. Let's slip into a quick break. On the other side, our entire research team will be with us to help us with the list of top 10 stocks. Stay tuned.
Welcome back. You're tuned into Morning Call here on CNBC-TV18. Well, the SGX Nifty is suggesting a big downtake to kickstart trade. But let's get stock specific and track the top 10 stocks for you. Well, Sonia, you go first. We had the Tata Motors number. JLR looked a little disappointing.
It did, actually. So the retail sales for JLR continue to be under pressure, and the management cites the semiconductor shortages as one of the issues. But nevertheless, these numbers are not looking good. So the total JLR retail sales are down by 5% year on year. If you look at the breakup, Jaguar sales are actually down in almost double digits, so down about 10% year on year. And Land Rover sales are down by about 3.6 odd percent. JP Morgan, in fact, this morning has downgraded Tata Motors from an overweight to a neutral. And they say that what this does is causes a delay in the deleveraging timeline for JLR. The miss is, of course, driven by supply chain constraints, but wholesales are worse than retail. So wholesales are disappointed, which is an indication. Wholesales are a better indication, you know, of the amount that the company sells to the dealers. So if that has disappointed, then, you know, even in terms of earnings, the expectation is that things could not look good in the quarter gone by.
All right, thanks for that, Sonia. So that's Tata Motors in focus. Now, a lesser talked about name, we wouldn't usually find mention of these names here, but Jaiprakash Associates and Jaiprakash Power Ventures could be in focus. Why is that? Nimesh is here to tell us more. Nimesh.
Hi, Prashant. So, as you rightly pointed out, both these JPA Group companies will be in focus today because both the boards are going to meet today and discuss and deliberate the divestment initiatives for both the companies. So, for JP Associates, they have a cement capacity of 10.5 million ton as per the latest annual report. And in JP Power Ventures, there is a small grinding unit. Now, both could be considered for disinvestment. So, what I understand from sources that the entire cement capacity of JPA Group, including the grinding unit, which is under JP Power Ventures, will be sold to a large conglomerate. So that's what the news is likely to be, and the board is meeting precisely for that reason. The key to watch would be how much money they get from selling the cement assets. Remember, on JP Associates, there is a large debt on the books, so not anything will come to the shareholders, but large part of the money will go to the lenders, and majority of the money raised will be used to repay the debt. As the latest numbers suggest, on JP Associates, there is a short-term plus long-term debt put together, all put together is around 28,000 crores. So major part of this fundraising, even if they sell these assets, will be used to repay the debt. What is more interesting is, with this deal, what I understand from sources, that the key lenders, which is SBI to JP Associates, once they sell this asset, there is a high probability that SBI will not drag the company, JP Associates into NCLT. That would be a big trigger for JP Associates going forward. But as things stand, we'll have to see how much, what all assets they sell and at what money they get. But both the boards are meeting today, and what I understand from sources, the entire cement asset of JPA Group will be sold to a large conglomerate today.
All right, Nimesh, thanks for that. So not being dragged to NCLT, I think that's the big positive. It seems the street was sniffing this because in Friday's trading sessions, both those two stocks were up between 6 to around 15% odd. Moving on to the banking names, and Abhishek is joining us to tell us about Bandhan Bank, that's the quarterly update, and IDBI Bank. Hi Abhishek, good morning.
Good morning, Nigel. So Bandhan Bank, the business update is not impressive in terms of loan growth, and they have lost sheen in retail deposits as well. So the book has remained flat for H1, that is if you compare the Q2 number to Q4 FY22, it's almost flattish over there. Overall advances have grown by 21.7% YOY and about 2.8% sequentially. There is no significant improvement in collections. Collections have come to 97% as of September when compared to 96% in June and about 99% that they had in March. So not much of an improvement over there. Also the fact that they have lost out on CASA ratio anywhere around 240 basis point is the decline on a sequential basis. Even the retail deposit traction is down. Overall retail deposits are down by about 520 basis point in terms of the retail deposit share. Coming on to IDBI Bank, government and LIC together will divest about more than 60.2% stake in IDBI Bank, transfer management control as well. There are conditions which have been laid down, like eligibility of bidders, wherein they say that listed private banks, NBFCs and AIFs, all which are SEBI registered, will be eligible. Even PE funds, foreign funds as well as investment vehicles will will be eligible. However, large industrial corporate houses and individuals are not eligible to bid for IDBI's bank. So criteria set for bidders are also there, wherein they have said that a minimum net worth of 22,500 crore must be there. They should have a PAT of 3 years over the last 5 years. If you take a look at the historical PAT, that is, and consortium tendering will have maximum of 4 entities, and some other clause has been set as well. Back to you.
Okay, thanks a lot for that. IDBI Bank could be a big stock today on the back of the divestment plans. But Sonal is also here to tell us about some more stocks that are in the news this morning. Sonal, good morning.
Good morning, Sonia. Well, 3 stocks that I'll be talking about today. The first one is IGL, where they've gone ahead and increased prices in the CNG segment as well by 3 rupees per kg. Now, remember, after the gas price hike, they are needed to raise prices by 8 rupees per kg to pass on the entire hike to the consumers. Still, there is 5 rupees per kg of price hike left by the company. SH Kirloskar, they have put out their Q2 business update, where revenues have grown by 7% on a YY basis in constant currency terms, which also includes an acquisition made by the company. Emerging markets grew 12%. However, company says profitability was impacted by higher input cost pressures and also currency movements. And net debt has increased on a quarter-on-quarter basis. So expect the stock to see some red in trade today. PNC Infratech, where they say they have achieved financial closure for 2 hybrid annuity projects of NHAI, which cost around 2,926 crore rupees. So that stock will see some green today.
All right, Sonal, thanks very much for that. Now, oil will be in focus, has been in focus with the rise that we've seen. Manisha is here with a quick update. Manisha, hi.
Morning, Prashant. Thank you for that. Well, even with 0.5% and 1% decline that you can see in both the crude varieties, we still are holding around that 1-month highs in case of crude oil prices. Well, the reason that you have seen decline right now is the Chinese service sector that has contracted for the month of September. But remember, we've seen 15% of gains in crude prices in the previous week, and it has the best weekly gain in last 8 months. OPEC and allies cutting November output by nearly 2% of the global supplies is what has been supporting the prices. And then Russia reiterating that they will not sell oil to the country, supporting the price cap on Russian oil. But what the markets are also looking at is the strength in US dollar after that strong US non-farm payroll data that we saw on Friday. And now the markets are looking at the US inflation numbers that will come in this week. The Chinese inflation and trade data is also something that the markets are awaiting. So this one yet again promises to be a volatile week.
Okay, volatile week. We'll keep an eye out on that. Brent at almost $98 a barrel now. So a lot of stocks perhaps could be in focus as well. In case you missed out on any of the stocks, here's a quick recap. Stocks with positive news flow. There's IDBI Bank, IGL, PNC Infratech, JP Associates, JP Power, ONGC and Oil India. While stocks with negative news flow, there's Tata Motors, Bandhan Bank and SH Kirloskar. Let's take a quick break on that note, but don't go anywhere. When we come back, Prakash Diwan will be joining in for some fundamental stock analysis. We'll also connect with RV Gumaste of Kirloskar Ferrous to talk about their business outlook going forward. Stay tuned. Welcome back to Bazaar Morning Call. We have plenty of stocks to discuss, and a man of the moment is Prakash Diwan, who joins in to give us his views on all that's been happening so far. Prakash, good morning. Thanks for joining in. The first stock I wanted to ask you about was Paytm, because it just came out with their data for this month gone by, and it's looking very good. The number of loans disbursed have gone up over 200% year on year, and the value of loans have also picked up 32% on a quarter-on-quarter basis. I know this is a stock that you've not really liked too much in the past, but from here on, how does the risk reward look?
Good morning, Sonia. So you're absolutely right. I think the turnaround seems to have got triggered, but you need to understand that these things can get disrupted very easily. It could not be a linear growth trajectory that they could clock. So if there is another quarter which endorses the fact that this seems like a trend where other things than just the payment gateway is starting to yield and contribute to the P&L, which is what we always thought was important for this company to justify or sustain valuations. I think there could be a re-rating which can be ferocious. Now, how quickly people get in will depend on the overall mood of the market at that point in time. Right now, the mood of caution that prevails, Sonia, there's going to be a little bit of a challenge, even for good news to get followed through in terms of buying. So I would reserve my distinct enthusiasm at this point. But it's great to see a large business like this finally seeing some sort of a turnaround, because there's so many shareholders, especially small retail shareholders, who've been disappointed in this stock, and that could be some sort of a respite for them coming their way. So quite positive, but I would, before buying into it or recommending a buying, I would wait for another quarter to see this follow through.
Well, morning, Prakash. What was encouraging as well is over the weekend, I bumped into you at an investor meet Saturday morning at 9 a.m. and, investors were full throttle in there. That goes to show the kind of interest that's there in the markets for, all those smaller companies as well. But that's a side note. I want to ask you about two stocks, JP Group stocks as well as Suzlon. Both those two shunned away, were part of the Nifty at one point of time. But now there are some corporate developments. Any view on Suzlon? We know the stock went running up and now it's corrected back to around that 7.5 rupees. There's an impending rights issue as well. What's your view on that one? And JP Group, that could be a tricky one for shareholders, right? The stocks have already run up a goodish bit and maybe the shareholder ultimately doesn't get anything. That's a big question mark. What's your take?
Yeah, good morning, Nigel. Yes, you're right. And it was absolutely great to be part of that SME meet. And then just to kind of add to what you mentioned, I think investor interest is getting very well defined. So there are people, a set of investors who are interested in microcap. There are people who are invested in momentum, and everybody has their share in terms of the rewards. So wise investing, wise trading is certainly helping. And I hope that continues. Specifically on these two names that you mentioned, my sense is, I'll take JP first. It's certainly tricky, and it's something which is only going to help repay all those, it's a messy balance sheet, right? I mean, we all know about this, and all these, divestments and sell-offs which they have to undertake are a compulsion. There is nothing in terms of value unlocking here that people should rejoice. It is something which you could get trapped into given the news flow, and we've seen this happen in a lot of these beleaguered names even earlier. And people think that this is going to be the end of all the woes, but it's too little too late. It's not going to change the dimension for the overall stock. And if you own the stock and if you get a bump up like this, on the back of some news like this, you probably could move out, but you'll have to review how things go before taking any decision in terms of adding to it. Suzlon is another kettle of fish. So what's happening there, Nigel, is you have a company that's finally getting its act together on just basic good old business. All those adventures that they have, the misadventures in terms of diversifying a bit too far, they've reversed that, and then there are a lot of things which they've started doing in terms of focusing only on their core wind expertise. And therein, there is a very decent order book, and there's a very good feedback that we get from companies that are into EPC and balance of plant and all, which do a lot of business with Suzlon. So it's a clear indication that this is renewables and wind energy particularly. And remember, wind energy is the largest contributor in renewables in the US, which is not the case in India as yet. And we will too probably, driven by the solar growth. But wind also has its place under the sun, literally, figuratively, and you would be able to see Suzlon grow. The only caveat there is that this capital restructuring, the rights issue and all, is very essential for them to just survive and go ahead in terms of being able to execute. Interesting point to note, Nigel, will be if there is participation in the rights issue from people outside, if the existing shareholders renounce and you have a new set of investors that possibly comes in. That will be very interesting.
Yeah, no, absolutely. I mean, but the bigger point, if you step back a little bit, is that if you see if the market is like a buffet, a lunch buffet. I mean, do you want to go to the end of the line to pick up, names like JP and Suzlon, or you want to start, with the good stuff, which is, by the way, at a discount, at a big discount. So that's the slightly bigger picture view. You always must keep in mind. When you're analyzing, especially, some names like these. Of course, things could turn, but, the wait for turn could be long. Prakash, hi, good morning. Just a quick point on, I don't know if you looked at Bandhan Bank's quarterly updates or, some of the others which have come through. But Bandhan specifically, yeah.
Yeah. Good morning, Prashant. So, Bandhan has, I don't know, it now seems to be a case of flatter to deceive. Every time there's an improved metric that gets shared, very soon the next quarter you have something coming and that reverses the entire sentiment and, expectation from the business. It's a very difficult business. It's not a business that's easy in terms of being able to grow as well as manage those collections. And this is exactly what I think, in spite of the metrics on efficiencies, collection efficiency being high, there are always challenges, right, to growth. So my sense is, while the metrics are encouraging, I would still stay away from some of these SFBs and particularly the MFI-driven SFBs. So it's far better reliable to get into housing finance companies. There are so many. I mean, you have a sleepy giant like LIC Housing or a PNB Housing that is still waiting to be awakened of sorts. If Canfin has its own share of problems. So my favorite pocket in the NBFC space is not gold financing, not SFBs or MFIs, but it's actually housing finance companies. So I feel Bandhan, the updates that you get still don't give you that conviction of the need to give premium valuations at this point in time to a business like this.
Right, Prakash, I request you to hang on. We're coming back to you, but listen to this interesting conversation we're going to have with the management of Kirloskar Ferrous. Remember, the stock has almost moved to a 52-week high, or it hit a 52-week high a couple of days back, while the metal index is still under some pressure. Well, to understand what's going on with the company, we're joined by Mr. Gumaste, the managing director of the company. Hi, Mr. Gumaste. Thanks so much for joining in this morning, sir. Well, a couple of questions before we get to the pig iron business on the casting business side. What is the monthly run rate that you have currently? I ask you this because you have a fair bit of exposure to the CV and the tractor space. So what is the monthly run rate you're going at? Do you have visibility in terms of orders? And also, you were increasing capacity from around 150 to around 200,000 odd. Is that still on track?
Yeah, currently our run rate is at 12,000 metric ton per month, which is very close to 1,45,000 metric ton per annum, which is very close to the full capacity, installed capacity we have today. And very shortly, we would be commissioning our fourth foundry, second molding line in Solapur. And that will take our capacity to very close to 200,000 metric ton.
When does that happen, sir? Q3 is what you had mentioned the last time.
Yeah, we are very close to those numbers, and our run rate has been good because the casting demand from all these sectors has been very encouraging for us, whether it's tractor, automotive industry, or even the earth moving equipment sector. So across all the sectors, the casting demand is good. At least the run rate or the demand picture will continue till all the festival seasons are over. After that, there could be some lull, but otherwise, for Kirloskar Ferrous, demand for casting is quite good.
Okay. So, sir, since demand is good and has picked up and your capacity will go up as well, you earlier had a volume guidance of 5 lakh tons in pig iron and 1.4 lakh tons in casting. That is for FY23. Would you want to scale that up considering how good demand is?
We have already, I think, declared earlier that our capacity in pig iron is going to 0.7 million ton. And casting capacity is going to 200,000 metric ton.
What is the volumes?
The volume guidance that you've put out for FY23, that's what I'm asking about, not your capacity.
The volume guidance, I have spoken earlier also, that we have been very consistently growing at a CAGR of about 15% for the casting business. We would like to keep up that over the next at least 2-3 years. With the capacity additions happening.
15% CAGR, sure. Fair enough. Could you tell us about ISMT, sir? What is happening? You'd said that there is a bit of you were attempting a turnaround there in that business. You own what, a little over 51%, right? In that business. Just some idea of what's happening and what kind of numbers we can expect.
One thing is we have completed the acquisition process and we are there, and we completed one quarter, quarter one, and quarter two results are yet to be announced. We are on the job. I think we are on our timelines, and we will do the way we have done. I think we will turn it around, and it would be an interesting case for KFIL because it's one of the largest acquisitions for us.
So revenues revenues were 2,100 crores for that business. What could we sort of expect in FY23?
Can you just repeat?
Revenues for that business were about 2,100 crores last year, right? What can we expect?
Current our run rates are very close to, very close to 3,000 crores per annum. That's very close to that run rate. I think, though it is still stretching, but we could be very close to.
Very close to 3,000 crores. And at a net level, sir?
500 to 3,000 crores is the range.
2,500 to 3,000 crores for the full year. And at the net level?
At
the profit level, net profit?
See, we have a big job to do there. We have to work on our costs and the capacity utilizations. Okay. There's a lot to be done. I think it's too early to talk about the profits.
All right, Mr. Gumaste, before we let you go, quickly, if you could fill us in with a few details. The iron ore business, the iron ore green signal had to come. For the last many quarters, every time you join us, you tell us now it's likely to come about. Which quarter, sir, do we see that all the final, all the green signals that come in? Because I think the rough saving could be a few hundred crores. So give us a status update on that front. And also you have a couple of cost-saving measures in the coming quarter. Is that on track, the coke oven, the captive power plant?
Or mines operationalization, that is the one thing which depends a lot on clearances from the government, and number of steps are there which I think not been able to keep up with any kind of our targets on the timeline. There are no major hurdles, but the process is taking time, and we continue to be optimistic that we should close the remaining steps and start operation of both the mines.
Mr. Gumaste, in terms of cost savings that Nigel was asking, is it 100 crores? Will you save more than that? What could the cost cutting be for you?
I think at this level of iron ore prices, about 100 crores is the kind of benefit we look from the iron ore business. And we have to get into the operation. With respect to other cost cutting projects, we are on line with the Coke Oven Phase 2, and very shortly we'll be operationalizing it. We are awaiting the consent for operation. And other than that, we have taken debottlenecking steps in existing foundries to ensure 150,000 full capacity utilization from the earlier 3 foundries, and then adding the 4th foundry, which is the second line in Solapur.
Okay, all right, Mr. Gumaste. Well, the broad takeaway for me is that your casting business continues to see a strong amount of demand. You're confident you can grow that business. That's the non-commoditized side of business. So that's looking good. I guess that's what the street is reading into. We let you go today, but post your numbers. You come back with us, and then we'll get to finer numbers in terms of profitability, ISMT turnaround, as well as your business plans going ahead. It's good speaking to you this morning. For the time
being, thank you very much. Look forward.
We'll have to slip into a short break. On the other side, Mitesh Thakkar will be joining in, as well as Sudarshan Sukhani. We'll get straight to their technical strategies. Welcome back. Well, the SHXF is suggesting a big gap down now. So let's get straight to our technical experts. We have Mitesh Thakkar and Sudarshan Sukhani, who joins us on the show. Morning, gentlemen. Well, Sudarshan, let's come across to you. You have to be very, very brave to buy the Nifty with the kind of global cues that we're having. But what is your view on the index?
Good morning, Nigel. Now, there's no way to say whether this gap down is a correction of the earlier uptrend or it's a resumption of the downtrend. I mean, it's difficult to say which one is this. So what we do is we wait patiently. We assume that this is for some reason, a correction of that big move we saw from 16,700 to 17,400. Now, there is significant support in the Nifty around 17,100, which is almost where the markets are supposed to open, almost. So if 17,100 holds, then at some point during the day, you will, as you said, I would be brave enough to buy the Nifty and keep a 100-point stop loss. If that breaks, then all bets are off for buying and just step aside. I don't think we can short at a 200-point gap down. So wait for 17,100. If it holds, buy. Otherwise, do nothing.
Okay. Mitesh Thakkar is also with us. Mitesh, good morning. What do you do at a time like this? After the gap down opening, what's the approach? And while you're at it, tell us about individual stocks as well. What are you buying and selling today?
Okay. Good morning, Sonia. So I think on the index, I think Sudarshan highlighted a very important level, 17,100, and then 16,980 is the 200 average rate. My sense is that if this decline gets arrested between 17,100, 16,980 zone somewhere, and then tries to give a rebound, maybe we'll attempt below. But if we continue to see this decline kind of go below the 200 average, then I think we might be resuming the bigger downtrend, and therefore we might be actually heading towards fresh lows just below the levels of 16,800, which is what we made about 5-6 days back. So I think the 200 average and the 17,100 support is the key area which I'm watching, is the key zone which I'm watching. And only below 16,980 will I short the index aggressively, because again, with the 250-point gap down, you might not want to short immediately. Maybe during the day we'll assess and take a fresh call on this. On the stock side, I have 3 sells to a buy. I have a sell on Bata with a stop at 1801 for targets of 1744. Dalmia Bharat is a sell with a stop at 1550 for targets of 1465, and Godrej Consumer is a sell with a stop at 841 for targets below 800 here. And the buy call is Bharat Forge on a mild decline around 760 buy with a stop below 740 for targets of 795.
By the stronger names, relative strength basically. Gentlemen, hi, good morning. Sudarshan, what about you? What would be your picks?
Well, on a day like this, see, it's my view that we are probably in a long-term bull market. So when you have sharp corrections like we are expecting today, this is a very good time for investors and position traders to buy good quality stocks at relatively lower prices. So ICICI Bank is a buying opportunity. For traders, the stop is 850. For investors, it's an ideal time to accumulate. NMDC is another buy. It has strong relative strength. Momentum has been rising. It's been outperforming the index. That's a buying opportunity with a stop under 131. And 2 intraday shorts, SBI Life, where relative strength and momentum are both weakening and have been weak. Intraday short with a stop over 1256. And Ultratech Cement, same position as SBI Life, very weak. Intraday short with a stop above 6307. But the thrust should be on accumulation of good quality stocks on days like this.
All right. Thanks very much, Sudarshan and Mitesh, with those trading ideas. Appreciate you joining in as always. Let's just look at the SGX once more. As I was saying in the morning, this is not very different from what we've had on earlier occasion when the data out of the US was very bad, was not bad, good, and that was bad for equities. But the only problem, the only complication is oil. And the move in oil started early last week, maybe the week before, end of the week before. And oil prices are now, 18% higher in the last 7 or 8 trading sessions. What that has done is that has put immense pressure on the currency once again, the dollar rupee, which is a problem. So that's the complication. Otherwise, I mean, we've had days like this when the market sold off, and then there was that impulse to buy at lower levels, buy the dip, and that worked as well. Not all the way into the green, but it was more good than bad. But oil, I think, and consequently what's happening to the currency, those are issues that one needs to. Those are newer elements, relatively newer elements that we need to deal with. Manoj Muralidharan is with us at Religare Broking with some F&O trading ideas. Manoj, great to have you with us here. Thank you very much. How are things set up and what would you do?
Good morning, Prashant. Prashant, I guess this is the time where your Nifty and Bank Nifty both are not really single buys. The Nifty has some negative buys. We can see that almost 5 lakhs of short positions was there in the index, and which is being carried. So we believe that 17,000 to 17,050 might be a support for the Nifty, which has done previously also. But on the flip side, if I get a gap down, which is evident at this point of time, it would be the Bank Nifty would be a better buy. I guess 38,700 to 800, this becomes a good level to go long. With say 38,400 as a stop loss, and there is a possibility of 39,200 to 300. So of the two, I think the gap down opening invites more of a long trade into the Bank Nifty versus the Nifty at this point of time.
All right, individual stocks, what about that? What are you looking at today?
Today there are results for TCS, and obviously we look into some quantitative analysis where we have found that the IBs, which used to be in the last recent season around 26 to 27%, are at 30-31. So TCS has seen some short position in the last trading session as well. So 3080 and 3000, this is the range that we expect the stock might be. So TCS become the sell and rise, sell it closer to 30 or short it rather closer to 3070 with a stop loss of 3090. And on the downside, a target of 302025 should be the target of TCS.
Okay, well, let's do one thing. Let's take a quick commercial break. On the other side, we'll have the pre-opening rates. And we'll also discuss some of the big trends in the FMCG space. Abneesh Roy of Nuvama Group will be joining in. Companies are all set to report their Q2 earnings. What to expect? More on that in a bit.